Good afternoon, folks. We're looking at the dollar index. The area in here I mentioned last Friday, there shouldn't be a lot of resistance in here. If we do trade higher above this high and come back and trade down into it again, I mentioned that we would look for a run up in here and have a relatively low resistance liquidity run for the buy side liquidity pool. I want to go into this area in here and get a little bit more detail, which is what led my confidence today in the euro short that you saw by way of my Twitter feed. The up close candle here on this particular candle right there, that close is 96.21.5. Remember, 96.21.5. The idea was we were waiting, or I was waiting personally, to see it trade through this high. Did I capture any of this for a short-term trade? No, it's not necessary. Knowing what you're looking for and having the patience to wait for it comes by way of experience. You're not going to get it by watching my videos. You have to participate and do these things in your own demo. The close, we see it trade back down into it here. We trade through that candle on this candle. And the very next candle, look at the low. 96.21.5. It's perfect. It's absolutely perfect. So there's no ambiguity there. There's no uncertainty there. It's exactly to script, as I said. Once it does this, then we're going to be expecting upward movement, try to make a run for these buy-side liquidity pool. Now, it doesn't have to get there, but today was just a proof positive that that's a 50-pip run in a weak currency. Because if we're expecting strength in the dollar, let's go into a 15-minute time frame. I want you to take a closer look. Look at the sensitivity of this movement. Here, hits it dead on 96.21.5. Then the market rallies through, comes back, finds some support, optimal trade entry, mitigation block, rallies through, small low consolidation, winding up to make a run above this high here. It runs through it, closes in a gap, rallies through again, closes in a gap, one more time presses into the 1800 hour on the day. The high, again, 1800. End of the highest volume generally by the end of the day there. It doesn't mean that true day has come to fruition. It just means that that's usually where the high will usually make on an up day. That's usually where I'm looking for it to go to. And if it goes through a little bit more, I don't personally care. So how that relates to the euro dollar, we'll move over to euro. This is the price action on a 15-minute time frame. Let's go out to a daily just for a moment. I mentioned that we were going to be attacking these equal lows, and we have a liquidity pull and void relative to the weekly chart, which I'll let you go and look at Friday's video again because we brought it back up in the discussion. So we're looking for downside movement. Coupling that with the strength in the dollar makes trading rather easy. So again, we have the 15-minute time frame, and you saw the charts that I shared on Twitter today. I was mobile today, so we're preparing for my oldest son living in our home's birthday on the 14th, and it's Valentine's Day, and it's my anniversary. So there's a lot of prep going into this week. So I'll probably be a lot less talkative on Twitter again leading up to that date, but I will try to engage as much as I possibly can. But I want to kind of go over in brief terms and not spend too much time on it the elements of what led to this setup, because I tried to record as much as I possibly could by way of my phone, and you can see the executions, you can see the time and fills and all that. Looking at the price action for euro here, it may or may not have been obvious to you, so I want to go over some of the things that led up to my conviction about what I wanted to do relative to the strength in the dollar. right away, if you look at the daily dividers, here's Sunday's trading. Over here, notice what we have. We have a liquidity pool resting below these equal lows in the form of sell-side liquidity. Sunday, we gap down and an energetic run lower. What's it doing there? Running sell-side liquidity. Then it pulls back up inside the range, drifts during the Asian session, drops down. We want to be a seller. So do we want to chase price when it's going down? No. We want to see price rally up, run through some buy-side liquidity, take some stops, engineer buying breakout artists. They want to get in there on the long. That occurs during the London Open. Market breaks down aggressively. We have a high energy low here. Okay, we talked about that on Friday. I taught you a natural market structure break. We're seeing it again here. So we find the energetic low that runs stops. If we ever break through that, this is where support and resistance, in this case, support broken becomes resistance when it works. Otherwise, if you just look at the textbooks, support and resistance is rather ambiguous. It's which one do you use? Okay, it's all the things that's being attributed to my work by neophytes or people that just look at it for the first time. It's vague, or it's not. We are absolutely ridiculous with precision, and I like it when it looks like that to the weak-minded, because I don't want to be babysitting basically closed-minded individuals or just goobers, and most of them are goobers. So if we look at the energetic low here, it is seen with a closing basis break on this candle. And then we come back and do the what? That's the standard retest. We expect that. We want to see it. That's a signature of IPTA. Price will then run away, classic, and then we wait for a kill zone. New York opens next, right? So we wait for New York. Price trades right back up into a breaker. We have this candle right there. That's your breaker, ICT bearish breaker. The price run or market protraction, it takes those buy-side liquidity pool out and neutralizes it, engineers longs on the high. If we break below that, we know that the context is we're going to wait for that to be traded back to. And we also have a natural market structure break. And we're also seeing it trade back to the opening. The opening? What do you mean by that, Michael? Well, let's take a closer look and put some lipstick on this. All right, so now we have a little bit more detail on the chart. Here's our sell-side liquidity pool. High energy low, running the sell-side liquidity, and then pulls back into the range. This is during a period of time where we're not really concerning ourselves with trading, nor are we trading during the Asian session because it's usually an accumulation phase. Buy-side liquidity pool. Market has a bearish ICT breaker as defined here because this high takes out the previous high, and then the low in between is broken. The retest of the natural market structure break here after this candle gives us a closing basis, a run below this. Now it says that this support is no longer support and it should act as resistance. Now, extending that out in time, if you were to sell short right at that candle right there as it slammed into it, okay, your stop still has to go above the high back here. Simple. Do you get stopped out with this little run in here? No. The higher form of analysis is to see the high that's being formed here. We want to wait for that to be traded back to the breaker. Trading right into here, that's the level you see me fill that because I traded right on the breaker. I had literally zero drawdown. There was literally no drawdown on that trade at all. That's why I share my time and price entries, because I want you to go back into your charts and see there's no drawdown. It's literally nothing. So even though it spiked through, I wasn't in on the spike through. I was waiting for it to come back down and touch the breaker, and that's my fill. So price starts to drift away. On a 5-minute basis, we have a little liquidity void I'm going to pull up now. This little gap in here. That's all I was looking for an additional entry, because the context is already in the marketplace. This thing was going lower. Sell-side liquidity pool was my first target. Price trades back up into it here. I went short right into this. I had a little bit of drawdown in here, and let's look at the scope of that drawdown. The high is 113.11.9. We'll just call it 113.12. And the high on this candle comes in at 113.14. 2 pips drawdown. It's precision, folks. And if that doesn't feel like precision to you, then, I don't know what to tell you. But very, very little drawdown. And then it consolidates and it explodes lower, making a run for the sell side liquidity pool. And we'll go back out to a 15-minute time frame. Then it comes back and retests this low. I'm no longer in the trade because I'm out shopping. My wife was looking at me saying, "You're on the phone too much. Get off the phone." So I missed the additional rundown in here. And then it came back and traded into this level here and then traded lower, attacking each sell side liquidity pool. All the way up to 1800 on the day, creating the low of the day. Classic IPTA signature. Then we come off the low, trading off into the close. And you can see Power 3 illustrated here. The opening price, right here, rallies up. That's a Judas swing, making the open to the Judas. So I want to be at that opening price or above as a seller, or as close as I possibly can be to that price, being here. Well, here's the opening price, and there's where I'm getting short at. Very, very close. Very, very close proximity. Everything we see here is classic price delivery. Beautiful, beautiful elements of what I teach in the mentorship. Everything to script. Everything. We waited for a specific thing in the dollar index. I taught you on Friday what a natural market structure break looks like, how to anticipate it, wait for it. It helps you refine your bias. And the pair that we focused on was the euro dollar. No other pairs are considered, and it was a perfect delivery. Now, is it done? I don't believe so. Obviously, we have a lot lower relative to last week's discussion and what we've been talking for weeks about as a weekly liquidity pool and void for the weekly chart. So we have some more pips to go lower, 111s or such. But this is what you want to see. You want to see a classic overview of what you expect to see in price action, and it to be delivered just like this. Every signature that I like to see for a trade was here today. I didn't fear taking the trade. I didn't fear missing the move. I knew exactly what I was looking for, and it's these same reoccurring things. Now, if the market was not ran on an algorithmic basis, these things would not be true. It would still have some random noise to it, some other things. It doesn't, because being utterly controlled by the banks. So once you understand what the banks are doing, all you do is simply wait. When you do, you know exactly what you're executing on, and or now you can go back and look at the charts in hindsight with a great more detail, understanding more about the details that were given in price, so you glean greater insights and experience. Without having to be in front of the charts, you can still go back and look at price data and find a constructive use of your time. In quick closing summary, we mentioned these equal lows could be a draw on liquidity. I was unsure, obviously, but I said that if we were going lower, this is the next area of run on liquidity or draw on liquidity. And that is very close to what we saw today in today's low, 28.44. This candle's low, 28.24. So we're only 20 pips away from hitting that. Do I think it can go down there still? I do. I don't know if once we go through here, if we consolidate, reverse, or continuously go lower. I don't know. And I'm just keeping my focus on euro dollar because it's a little bit easier to see it in euro. If we're going to see a six sister mentality, euro dollar sick, it's going lower. The contagion is going to be caught by cable if things are symmetrical, and we'll probably see this pair as well erode. So That's going to be it today, folks. Real quick, one more thing. Dollar CAD. We have a buy-side liquidity pool still above us that may still be tagged, and we have this one as well. So be watching for that, especially if we see continuation on the upside with the dollar, which certainly looks like it's possible. Until I talk to you next time, wish you good luck and good trading.